Hello everyone, Michael here again. Long time no talk. Welcome back to the channel. Again, on this channel we just discuss personal finance, savings, budgeting, and just all around investing in income earning goals to help us achieve financial freedom. Today I want to talk about something that really applies to most of us, and especially applies to younger people, like not anywhere near retirement. Don't use target date funds. Okay? Again, do not use target date funds. Why do I say this, guys? Just a little backstory. Happened to be about a year or so ago, I actually spoke to Fidelity. This is long before I started doing a little bit of research in investing, the markets, things like that, to where I was got a little bit more knowledgeable and a better understanding of how things like this work, and a little bit more sensibility with it all. But it happened to be about a year ago. Something just possessed me, and I was like, hey, I really don't know much about the markets, but I know I'm young. I'm still in my 20s, and I got plenty more years to work. I contribute a solid portion to my 401k, and I wanted to have the best chance to grow, with the many more years I'm going to work and many more years I'm going to be contributing. And I also knew my risk tolerance would be very high because I'm so young, so I could handle some, possibility of some losses, possibly some gains, but I'm not in any rush to withdraw anytime soon. So, I want the riskiest. So that's exactly what I told Fidelity. I called Fidelity, and I said, hey, hey, I'm young. Put me in something risky. I want you to hide the riskiest thing you got, put me in it, and set it in and forget it, because I'm young. I don't mind something risky, and then we're going to take it from there. Okay? That's exactly what I requested. Again, I didn't know much about the markets and types of funds and what to invest in, so I'm expecting Fidelity as my as the holders of my retirement account to go ahead and guide me in the right direction and just take it from there. Make sure they have me allocated in something that's very non-risk adverse, very high growth potential, and they could guide me in that. So I spoke to the representative. That's what they said they would do. They said, hey, well, you're in a target date fund currently, leading towards 70 years, being 70 years old to retire. So it was kind of crafted towards that goal, 70-year retirement. So they said, what I'm going to do for you is actually put you in a target fund where it's a 60-year retirement, or retiring earlier, which is just a more aggressive target date fund. Me being a little bit naive to it, I thought, okay, hey, sounds like a good option. Hey, go ahead, put me in that target date fund, because it's more aggressive, and you said that's the most aggressive you've got. Okay, so they put me in that target date fund. So I think that year, that was last year, I probably finished the year on a 7% positive. Fast forward to this year, all the volatility, markets dropped down 30%, markets bounced back up to new record highs. You guys know the story from there. So that's, that was just a huge buying opportunity. Some people benefited from that because there were bulls and saw that dip as the largest dip that it would be, and a great buying opportunity, and have made thousands, if not millions, at that opportunity. And some bulls, I admittedly, like myself, thought, hey, this might be a double dip, or it's going to dip even lower when the full wrath of the economic downturn comes to light. So let me just hold back. Right now it seems like the bears, right now it seems like the bulls were correct. because it just seems like the market's at new record highs. It's only going up from there. Okay, for the bears or the people who were bears, still yet to see. It might be a double dip, might be a bubble burst, some correction in there somewhere. We're not too sure yet. It's still like a wait and see. But back to the point, it's not until sometime this year, just when I realized, picking my own stocks and stuff, I realized that's a little tricky, unless you're gonna pick some of the FANG stocks or the top tech stocks. That was what should have been chosen, and I picked some other smaller time stocks. Didn't have the best results, it's tech stock seems to be king. Okay, so fast forward, just recently I found out that Fidelity actually has large cap stocks, and also the Fidelity trend fund, right? So I'm just recently finding this out, realizing, hey, you know what? I need to put my money in some of these larger cap or big time tech companies like Facebook, Amazon, Google, Tesla, companies that are not going anywhere, instead of trying to like pick in the bunch of like upcoming stocks. You want to pick some of these big time companies, because believe me, when I'm an old man and I have grandkids, these stocks are still these companies and entities are still going to be around, So coming to the realization that, hey, if you want the safe bet, stop trying to pick these upcoming stocks and trying to be like a fortune teller and, pick the next Amazon, Tesla, Netflix, etc. You just want to get a fund or pick these stocks themselves, because they're not going anywhere, and they're only, from the looks of it, they're only improving. Okay, they might dip, or burst later on. It's hard to tell timing the market, but one thing is for certain: they will continue to grow, and they are household fixtures or stocks that will always be around and always be doing well. These companies aren't going anywhere. So come to find out, Fidelity actually has a fund for these kind of stocks, and I'm certain that most brokerages most brokerage companies and 401k providers, they do have funds for these stocks that aren't target date funds. You get my gist? So for all of you out here, especially if you're not planning to retire any soon and you can handle a little risk, please learn from my mistake. And before it's too late, I'm not a financial advisor or anything, I'm just some guy on YouTube. But before it's too late, please get out of those target date funds, that are just have a lot of bonds and assets and corporate debt and stuff. Get out of those, okay? And go into a large cap, high growth, high growth fund, and make yourself some money, because these growth funds are incredible. These growth funds, some of them are up 15-16% over the last 10 years, so that's 10 years of a 16% return on your money, compounding on top of your contributions for 10 years. So learn from my mistake. It's not too late for me, but it's just a hard lesson learned, that these high-end growth stocks are out there. High-end growth funds are out here, but sometimes our brokerages guide us into these target date funds as if we're 70 years old already. That's for guys, that's for people who aren't risk adverse, who don't want to grow with the economy. The economy is always going to grow, and you want to get these powerful growth funds so that way you can increase your money exponentially as you age and the economy continues to just flourish. Okay, so lesson learned there. Very upset with Fidelity, but can't blame anyone but myself, my hubris, for not doing my own research more into it and just kind of trusting them to direct or allocate my funds for me in the best position for me. So again, just a guy on YouTube, you definitely want to do your own research. and you definitely always want to self-manage. Although the 401k is kind of like a set it and forget it, and the whole point is you not touching it so you don't make errors or invested in just stocks on your own. You still always want to be actively paying attention to your 401k and researching and trying to find the best funds or options for you. Again, you don't want to just go out there and just putting in random stuff on your own, but try to stay within a fund, especially one of these brokerages funds, because they're funds for a reason. They know what they're doing, and they know these are the top performing stocks. So try to find a fund, research a fund, and get the heck out of these target date funds. Okay, guys. So again, Michael here. Just haven't spoken in a while, but glad to speak with you guys. I hope you have a great rest of your work week. Start your weekend. And just tip is today, just avoid these target date funds and try to find yourself the best large cap fund or high growth fund for you. Okay, I'm going to leave some offers in the description below, including some free stocks, some bank churning opportunities, and great talking to you guys. Peace.